The investor sentiment and positioning is broadly cautious as we head into Q3 earnings season, as there's angst building around 2024 outlooks and whether we will get a Q4 budget flush. If we look at channel checks and alternative data providers, they're painting a conflicting message on the health of IT spending environment. And I would describe the visibility as clear as mud at this point. And what I would say is that tonight's earnings calls from the mega caps like Google and Microsoft will give us a better understanding of whether the public cloud consumption headwinds are abating or not, and the trajectory of the hyperscaler capex into 2024. The thing is that if you rewind to the start of 2023, as cost of capital has risen, all these companies went on an endeavor to become financially fit. So we've seen significant positive earnings and free cash flow revisions upwards. Margin expansions have taken place. But what has been pressured is the net revenue retention rates as expansions have slowed, as customers have cut back on spending and optimized their budgets with these big mega caps and other software providers. So the question is, going forward into 2024, with Gen AI products from all these software companies ramping, whether that will serve as an incremental monetization driver into 24 to drive, better revenue growth, especially given that the macro environment continues to be broadly stable and the comps are going to be easier into 2024. The last point I would highlight on this front is that we should not overlook the lapping of the precipitous decline in venture capital funding that started in 2Q of last year. If you look at the trailing 12-month VC funding, it is sitting at $262 billion, which is down a little over 50% year over year from $538 billion last year. And the biggest negative step down occurred between Q2 and Q3 of last year. And assuming a certain percentage of these VC funds end up as public cloud revenues, the drag from that collapse in VC funding exactly a year ago, by our estimate, is a drag of about 10% of public cloud revenues. So I think the comps are easing into the back half. So that's the backdrop, and we are very interested to see how the revenues flow are reported tonight.
Something I'm keeping a close eye on is buybacks, because we know that technology companies in particular have been a key pillar of support when you think about the broader stock market. In last year with those buybacks being at a record, but they did slow in the first half of the year as technology companies obviously were going through a lot of cost-cutting efforts. What are you expecting to hear on that front from some of these big tech companies?
Yeah, we expect capital allocation to be an important topic going forward, given the cost of capital is higher. And so I think expect a similar strategy going forward in terms of buybacks as free cash flows have ramped up. I do expect a balance between investments and buybacks. And I don't expect any major surprises on that front going forward.
So for the first half of the year, we all learned a new term, AI. And every company that reported earnings for 2 or 3 quarters, whether they made dog food or whether they made, missiles, talked about how AI is transforming their business and going to supercharge it.
Kroger, those mentions in the earnings reports.
Wendy's, McDonald's. What is AI to you, and is it incremental to spending?
Yes, it's an interesting. Initially when if you look at the equity performance between May and July, we were in the hype cycle of AI. And in general, I would say investors generally overestimate the impact of new technologies like Gen AI in the near term, but underestimate the longer term impact. So what is Gen AI? Definitely, I think we've been, as part of our ongoing due diligence, talked to a lot of customers. We've spoken to leaders of IT departments at big financial institutions, industrials, and healthcare companies. And there is definitely a view internally that GenAI could be a meaningful productivity enhancer. And all these companies are exploring different GenAI use cases within their organizations. Our sense is that the first use cases for GenAI are probably going to be internal use cases to improve productivity improvement, be it in a call center agent, for a marketing professional, for a software developer. These tools, anecdotally, what we've heard, increase productivity by 25 to 30%. So they're definitely pretty impactful. There's a lot of interest within organizations, but they're also mindful and want to understand the data privacy issues around GenAI, security issues around GenAI, and the cost of implementing GenAI. So they're moving thoughtfully and conservatively. That's why I said we overestimate the impact of the near term, but underestimate the longer term impact. So as GenAI products from software vendors become more generally available, Microsoft's is coming out on November 1st, for example, a lot of these tools will be rolled out. Then the enterprises will decide whether it makes sense for them at the cost, at the price points that they're being delivered. But from our vantage point, it's more a 2024, 2025 revenue growth driver.
Right.